Good morning, traders. Today is Wednesday, March 30th. My name is Charles, and this is the Pirate Traders live stream. All right, well, I just wanted to start the day zoomed out a little bit here, looking at the daily chart, just to give us a little bit of perspective about excess, okay? So balance and excess is a pretty simple principle. When the market is stuck inside of a range where it's bouncing around, when it breaks out of that range, it often creates excess. It causes a push higher. But that excess has to run out at some point, and then the market needs to do another balancing range, right? This is just the way the market moves higher or lower, is it balances for a little bit, then it gets a period of excess where it pushes to a new location, then it balances for a little bit, and so on and so forth. So right now, at the close yesterday, we have a lot of excess to the upside. So one thing to consider is that the market might be due for a little bit of balance, right? The market might be due to spend a day or two bouncing around in this range, looking for some support and resistance, giving buyers and sellers a chance to compete. And then if the buyers win, then we get continuation to the upside. Doesn't mean it has to happen. We're in a period of excess. We could get continuation of that excess today and continue to push higher. But it's just worth noting how much excess we've gotten and that we are due for a bit of a little bit of a correction of that excess. Now, there's two ways to do it. One, price pulls all the way back down, correcting it with price. The other is it corrects it with time. It just rotates sideways at a higher price, and it lets time do the correction, as was the case here, right? So let's wait and see what we get today, but I think we are due for a little bit of balance. Worth keeping in mind. When I open up the chart on the market profile and I look at the market in 3 dimensions, what do I see? What jumps out at me? Well, first and foremost, spike rules are in play because we had a spike yesterday. We are opening below that spike, so that means that that is the least bullish scenario. The most bullish is opening above. Good old-fashioned bullish is opening inside, and it is the least bullish to open below. But it is important to note that doesn't mean it's bearish. It's just the least bullish. It's just a sign that that momentum that we had at the end of the day yesterday has already weaned from the market. But it is still bullish. So the next thing that jumps out at me is all of the weakness that we left behind yesterday. We left 3 weak references behind and a gap that needs backfilling. So again, going back to the conversation that we had about we've had all this excess getting us up here. That excess eventually will need to balance. What is a sign that we need to balance? Creating a lot of weakness below. Okay? So that adds to the narrative that we may need to pull back down to fill that gap. Doesn't have to happen today, but there is weakness that needs repair. So keep that in the back of your mind. I would say right now at the open, I'm pretty neutral. I'm expecting chop, obviously. We're opening inside the previous day's range. I'm assuming we're going to get resistance around this 46.19 level. And then I'm looking to see how the market reacts to that. Is it able to push through that resistance and get continuation higher? In which case I would look to target the overnight highs at 46.28. Or if we get resistance there, where do we find support? If we get resistance up in here and the market can't get any higher, we're likely to head down and repair the first weak reference. Does that bring in the buyers? Do we get support with the repair of the first week reference? If not, the next, and so on and so forth down the line until the market finds support. That is what we call monitoring for continuation. And if that is the case, if the market does start to sell off to repair these weak references, the lowest weak reference is the high from 2 days ago at 45.69. So as long as we're in the middle, as long as we're between this volume node and this one, I expect chop. The market will just grind around. If you have not yet, please smash that like button. It really helps if you guys push that thumbs up first thing in the morning. I surely would appreciate it. It's worth noting the base of a spike up, if you open below it, it doesn't matter anymore. You can basically just get, whoa, hey-oh. You can basically just get rid of that once the market opens below it. If you open above it, you want to keep that level there because it will act as support when the market comes back down into it, but it won't necessarily act as resistance on the way up. So you can go ahead and delete that level. I'm going to keep it on my chart just so that I notice if we do push back into that spike. But it's not resistance above. The resistance is the volume node and the time node right here. Also, I forgot to mention the overnight inventory is net short, so we would expect a counter auction to the upside, which is what we're getting. And we're just now starting to push into that resistance. Good morning, Chris Yee, Jeremy, Cyrus, Scooball, Laser Eye, Mick Stockster, Hustler Forever, Novice Trader, Caffeine, and MW. Welcome, you guys. Good to see you. Bossman is here. Mike in the house. Design Knob, Philip, David Glass, Dean is with us. Dean's having technical difficulties. Is it the sound again? Tuttle, highly bearish open? No, not at all. Not highly bearish at all. Like I said, we of course have the risk that we might need to pull back down today and repair some of this weakness, but the momentum is still to the upside, right? That's why I said even opening below the spike from yesterday isn't bearish. It's still bullish. It's just mildly bullish, but we still have the momentum. Value was higher yesterday and it's higher today. So, no, it's not bearish by any means. We're just open to the possibility that if we don't find support right now, if the market comes down and starts testing this area around the overnight low, if we don't find support there, then things could get messy very quickly. But as of now, the momentum is still to the upside. Good taper on the high, good taper on the low. We have chop, my friends. Expect this to last a while. The grinding up and down. The uncertainty is in the air. Fat Thor, good morning to you. Trading Donkey, what's so good about it? Every day where the market gives us a chance to make money is a great day. And we ought to be thankful. Ronald, good morning to you. Bossman, can we take a look at the queue? We most certainly can. So same thing as the ES. Got lots of momentum from that breakout. Still got a gap that needs backfilling from yesterday. Look for support around 15,151. 15151. Look for some support around there. If that breaks, further downside continuation. You also have a poor low on the queue, so you have a gap and a poor low. That is a very strong magnet to pull price down. So if they start to get below these overnight levels, they're almost certainly going to go back and repair that poor low. So you are definitely looking for support in here. Man, the low on the overnight was poor too. Shit's weak. Yeah, that Q looks like it needs to pull back. So keeping an eye on this level right here, looking for support. Okay, so on the ES now, the next target to the downside is the repair of 4607. Looking for support there. All right, so like I said, to me, the fact that we couldn't get back above this node of resistance from the overnight at 46.19 increases the odds that we need to repair this weak reference at 46.07. And right now, it feels like the only thing that's stopping us from getting there might be this 20 moving average on the 15-minute candles. Remember, that's where bots buy. That's where algorithms buy. So if we poke at that a few more times, those algorithms will let it poke through, and then we should get that repair. But for the moment, continued chop. Jay Trader, good morning to you. Nor Auto Trader in the house. Good to see you. Arthur, welcome. Donkey, quarterly options expiry tomorrow. No money will be made today. What does that mean? You looking for a rotational day? A sideways day? John, good morning to you. Harry Pete, does good taper have to have pink bars or last bar over 100? Doesn't have to have the last one have more than 100 contracts, but that is generally what I like to see. It's like the least important of everything, though. There's lots of times you have less than 100 and you still make a good high or low. So don't get obsessed with that. But it is one of those things. If you're questioning the taper, if you're getting resistance, you can use it as one more data point that they might need some more two-sided trade down here. But no, you don't need pink candles. You actually don't want pink candles. You want the white candles getting smaller and smaller. Okay, buyers once again at that 20 moving average. How many pokes will it take to get through? Donkey saying be like the algos and buy the 20. Greg H., can you briefly review the downside references mentioned after the open? Sure. So anytime that the market has a lot of weakness below it, where it's building up multiple weak references like this throughout a day, or if it has a couple days in a row where it does this, the way you want to trade it when it starts to head back down is something called monitoring for continuation. So you don't necessarily want to like go short here and just target this, or go short here and like target a gap fill, right? The way to think about the weakness is that it's like magnets. So the gap is a big, strong magnet, right? And each of these weak references is like another little magnet. But all of them are made more potent with each new magnet that you add, right? So the market's need to get down here and repair the first of the weak references is very, very high, right? Like there's so much, force pulling on it, tugging on it to come down and repair that. But once it does, that alleviates that first magnet. That magnet is gone. And so the pressure is alleviated. And so maybe that's enough that it can find support and get continuation. But if it's not, it needs to come down and do the next one. And maybe that's enough and it gets continuation. But if it's not, it needs to do the next and the next. So that's what we call monitoring for continuation. You stay in the short until you're sure that the market has found support and is reversing the other way, because the market can and often will just keep repairing weak reference after weak reference after weak reference. When it's in the mood to balance, it does it very directly. So that's why I say getting resistance here really increases the odds in my mind that we need to visit at least the first of those weak references. And the only thing stopping us are those algorithms. So they can be beaten. As is the case right now. I will officially get bearish if we get below 46.04. Because I think if they get below the overnight low, it might start that piling on effect where more and more people go short. Because they do know that gap was left behind yesterday. So looking for a repair of 7 and then support. Another thing we can look for now that we poked through that 20 moving average, does that now become resistance to the upside? That might be what you would see if the market wanted to trend lower. Whereas if we just start passing through that 20 moving average over and over again, that's a sign of rotation. Trading Donkey, weird to see tick candle bodies below zero. I mean, the overnight inventory was net short. That's why. All right, so now we're looking for resistance in this node around 16 for continued chop. We are getting resistance, so I'm just waiting for that tick to get slapped back down. Or not. All right, the buyers seem to be stepping in up here. So it looks like they want to try to poke through this resistance. Lots more just above 46.1950. You guys can see how the taper is getting better and better with each push up. We're getting perfect taper here. That is a sign that we are running out of buyers up here. But they're certainly trying. All right, NQ a little bit weaker than the ES here. It seems to be getting resistance from that same 20 moving average that was providing support for the ES. And the ticks are a little weaker as well. Boss man, so basically the market has OCD. Not OCD. I would say the market is bipolar. I would say the market has borderline personality disorder. Market don't know what market wants to be minute by minute. France, how's the old market looking today? Yeah, like I've been talking about all morning, it's a tough call. It's got a lot of strength and momentum to the upside, but it's left behind a lot of weakness in need of repair. So we're kind of stuck in that middle ground of indecision. If we break this node to the upside, I could see some continuation there. If we break this one to the downside, I could see some continuation there. But it's kind of just a guess in the middle. I still believe this first week reference does need to be repaired, as I discussed with the magnet theory earlier. So I would say maybe not 50-50, maybe 60-40. 60% chance of a break lower, 40% chance of a break higher. Trading Donkey, day 12 of the one-time framing up on the daily. Is today the day to fight the trend? If you're implying that you wouldn't short unless we made a new low on the day, your only short is going to be the gap fill, but that's still pretty big. You get short down here for the gap fill, but you're leaving quite a bit on the table. Waiting for that. crypto winter is coming. Doesn't look like it to me. I think a lot of the cryptos are just starting to break out. Oh man, they broke through that resistance. So now we're looking, does this resistance from before act as support? It's a little bit bullish to see. Jay Hood, I've heard the stat that the overnight high or low is 90% of the time taken out. Do you agree with that stat? I would say it might even be more than 90%. Yeah, the overnight high or low, one or the other, is almost always taken out. Where it gets tricky is there is no probability as to which will be taken out. So when the market opens, you don't know if that day you're going to take out the overnight high or the overnight low. But once you pick a direction, you can assume that at the very least you could target getting to an overnight high or an overnight low. Andrew G. Market is a robot with lots of money to throw around to take others. Chaos. I don't know that I would call it chaos. I would certainly call it random, but I don't know that I'd call it chaos. It's pretty orderly most of the time. It just feels chaotic in the moment because you don't understand what's happening. But often when you look back, when you zoom out and look at a daily chart or whatever, it makes perfect sense what the market is doing. Mike, given those percentages, 60-40, would it not be profitable? So start shorting up to a certain point higher? Well, 60-40 is me, like, basically I said, as long as we were in between this node and this node, I was like 50-50 as to which way it would break. And the magnets just make it a little bit of a higher probability. So yeah, I mean, if you're looking to get into a trade and you think there's a higher probability of a move to the downside, you want to sell resistance. So you'd be looking for your entries in here and in here, although I wouldn't have sold up here because I would have been nervous for the breakout. But yes, that is the way to do it. If you think the higher probability is a repair of a lower reference, you look for resistance and you sell into that. All right, so now we're testing this node that was resistance earlier this morning. Will it act as support now? Screwball Pirate Traders, don't you think we didn't have a few hours trending day long time? I think you're asking, it's been a long time since we've had a traditional trending day. Yeah, it's true. Gone are the old days where the market used to start trending first thing in the morning and just keep going for like 6 hours straight. Gone also are the days of the market going from trend to rotation and then rotating until close. Almost, I would say 75% of the time now, if we're rotating, at the end of the day, we spike one way or another. It's crazy. But markets change, and that's just the way they move now. I've long since had the tinfoil hat theory that there is a self-learning algorithm out there. There is an AI that is recognizing the overall shifts in market moves intraday, all day, every day, and is countering them, which is why we get these funky things over and over again where like the market makes like a pattern. It does exactly what it's supposed to do, breaks out to the upside, comes back down, breaks through again, then comes back. It's like, what the heck? Why did it do that? It never ever used to do weird stuff like that. But now every day it does that. So I think there's just algorithms that have learned, oh, there's a ton of long liquidity right here on the retest of the breakout. If we just dump on them, we can make a fortune squeezing them. And then that computer's like, okay, we've squeezed all we're going to squeeze. Now let's really piss them off and take them right back through that level to the upside. So they have to FOMO in and we get the momentum on the upside. I think we're trading against computers and we don't even know it. Someone's going to write a book 10 years from now. The AI that changed trading forever. And we'll all go, oh yeah, I remember that. I remember when things got weird. Design knob, as my great grandpappy used to say, the market is the market until the market is not the market. Yep, Jim Dalton has that saying too. Traders will do what works until it doesn't. Like they'll keep doing something until one day it stops working and then they stop doing it. Trading Donkey, if you truly believe that your edge is dying, I do. I do truly believe that, and I do truly believe my edge is dying. I don't believe 10 years from now there will be any more discretional traders. I think it's going to be all algorithms, trading algorithms. At least intraday, that is. Obviously, you'll still be able to do discretionary trading over a longer term, but intraday, I think it's going to get harder and harder to beat the computers. All right, well, the Bulls stepped in at halfback there, and they're making another poke at this resistance above. It also looks like the NQ is pushing up into that 20 moving average on the 15-minute candles. So both this node of volume on the ES and that 20 moving average will act as resistance. If both markets break through those resistance at the same time, we could get a little pop to the upside. If not, the chop will continue. Jay Hood, I've often thought that governments use AI to move markets. No, governments use policy. Governments use massive policy to move markets. Quarterman, can't let it get too weird or nobody will want to trade. I completely disagree. Look at the crypto market. The crypto market for the last 5 years straight has been nothing but pump and dumps. It is all fake, choreographed, organized, systematic taking of poor people's money. Like one after another, they pump it, they level it off, and then they dump it over and over again on every asset the same way, day in and day out for years and years and years. And guess what? It has not stopped anyone from wanting to trade crypto. Those shiny objects, those gains, seeing that an asset went up 10% in a day, people cannot resist it. Even if they themselves lost money trading crypto in the past, they still can't help it. They got to put more money in. Boss man, that sucks. So the geeks will rule? Bro, if you don't already think the geeks rule, like, who are the richest people on earth right now? Elon Musk, Bill Gates, Jeff Bezos. Like, the nerds have already won, bro. That's old news. Man, this thing really is Chop City, USA today. Good taper on the high, good taper on the low. Where this market wants to go, they just don't know. Looks like the 20 moving average is holding as resistance on the Q, so it remains weak. So now if when we push back up into this node that was just acting as support, if that now acts as resistance, we can look once again to target the repair of that weak K period low. As the chop continues. Jason, I think some smart peeps will write AI for retail day traders as well. Yes? No. The smart peeps will write algorithms for the rich peeps. That's how it works. Power begets power. Do not count on some random Robin Hood coder wanting to make the world rich. You got Satoshi Nakamoto, and that's it. Everyone else is in it for money. TFT, you don't realize even the best learning computers only play Monopoly about the same skill level as the average human? You are way behind, if that's what you think. They have quantum computers now. Greg H., very much disagree on the point of discretionary going away. What is going away is somebody 15 years ago said, do this, and that works. Human rapid adaptation will make money. Well, that's never been the case in the entire history of the stock market, but I appreciate your optimism. The market has always been, since the dawn of time, a mechanism to take money from the few, or take money from the masses and give it to the few. Brownfield West, I've done some algo development. They have a few market maker algo templates, even free. Yeah, any free templates that are out there are not what I'm talking about. I'm talking about tech that you don't even know exists right now. It hasn't even been published anywhere publicly. The algorithms that you're talking about, that you're buying on a subscription service right now, those were what they were using a decade ago. And I'm not, guys, don't get me wrong. I'm not saying don't be a trader. Don't be a day trader. I'm just saying you must accept that it is getting more and more difficult to trust intraday patterns because they are becoming more and more random. And the randomness seems to adjust consistently, like day by day. So what I mean by that, to try to get some clarity here, is like, let's say the market wants to go higher today. Let's say it wants to get up to like 45 or 46.38. That's where it's going today. The way it used to do it is it would like open and start trending higher and it'd grind its way up there. Then it'd get up to that level, come back down. We'd get cessation of one time framing, and then it would rotate sideways for the rest of the day. Maybe we'd get a little spike or maybe we get a little pullback, but not much at the end of the day. And then we'd get up to where we were going. But now the way we'll get there is like we'll come all the way down here and then we'll come back up and then we'll come back down and then we'll go back up and then somehow we'll do a loop and then we'll be up there in 2 seconds. And it's like, what the fuck, man? Why? That's the algorithms. We're still going wherever we're going, but the way we get there is much harder to read. Phoenix, that's going to be a good long spot, the repair of the week low. Yeah, it could be. It's where they found support in the overnight. Market certainly doesn't feel bearish at all. Phoenix. But Charles, in this future you speak of, where we're all trading is done by machines, computers, won't humans be machines by then too? Neuralink? Yeah, the rich humans will. 100%. Okay. With the printing of the C period, we pulled the POC a little bit lower. That's slightly bearish. Not a huge deal, but worth noting. So as far as where to leave you here today, as I've been saying all morning, I really feel like we need to repair at least the first of the week references below. That is 4607. We may find support there, right, in this node that we found support in the overnight. But if we don't, I'd be monitoring for continuation to get to the next one and then further down from there, all the way until we fill the gap we left behind from yesterday. Of course, if we do find support, we would want to look to go long for continuation of the momentum in the market because value is higher today. Okay. Good luck. Happy trading. Thank you guys so much for those 66 likes. Half of you think I'm okay. Sure appreciate that. And thank you for the fun conversation today. I got to talk about robots. So I will see you all here tomorrow morning. Have a good rest of your day.